Have you ever wondered what it's like to save over $10,000 per year in taxes simply by electing your entity to be taxed as an S-Corp? I'm going to walk through what it means, how you determine if it's helpful or hurtful for your entity and your business, and also how we saved Matt Lucero, a coach in the Client Ascension coaching program, over $10,000 by switching his entity to an S-Corp. So give this a like, comment on this, ask me your questions, and subscribe because I'm putting out videos each week that go through all the details when it comes to accounting, finance, tax optimization, working through ways to find and make you more money for your business. So let's dive in. So let's run through an example, and I'm going to show you this form. This is Form 2553. This is the form that you fill out and submit by March 15th, which is typically the requirement date. There are some exceptions. There's quite a bit of instructions on this form. It can get complicated if you don't follow it and you don't submit it correctly. You can get auto denied by the IRS. Essentially, this is what you're going to send to the IRS to become taxed as an S-Corp. And let me just be really clear and make this simple, very, very quick example. Just because you have an LLC, if you go and elect to become an S-Corp, it doesn't mean you're no longer an LLC. You can't just say, oh, well, now I'm an S-Corp. You still have an LLC. All you're doing is just changing the way in which your LLC gets taxed. Because when you first start an LLC, right, you can have a single member LLC or you can have a multi-member LLC, right? So say there's two owners, you and a business partner. If you have a multi-member LLC, that defaults to be the tax classification of a partnership. And by the way, when the income and expenses come in, your net number, it just divvies out and goes to each partner on their personal returns, and that's how it gets filed. If you're taxed as an S-Corp, you will then have to file a separate tax return called an 1120S. You don't have to go into all the details, you don't have to know everything about it, but just for the purposes of explaining this, the way that this works and the way that you benefit is by reducing the amount of self-employment taxes, Medicare, and Social Security taxes that you would be subject to as a single member or a multi-member LLC. Because when this form gets approved by the IRS, what essentially happens is you, the business owner, will be able to be classified as an employee on behalf of the company. So what's the implication of that? Basically, if you make 200 grand a year, right? So let's say you've got 200 grand here. That's your net amount that you're going to take home, okay? Your net income. You're a single member LLC, that 200 grand would just, boom, go right over to your personal return and you would get taxed on that at whatever rate that you have. Most likely in that range, depending on where you are federally, you're going to be probably north of 20%. But if you're an S-Corp, what happens now is you would then essentially assign yourself a reasonable salary. So if you own your own LLC and you get approved to be an S-Corp, to be taxed as an S-Corp, essentially you would assign a reasonable percentage of that $200,000 to be a salary. So if each year, you've been making $100,000, $200,000, let's say you just assign yourself 30% of that amount each year that you pay to yourself through payroll each 2 weeks, each month, whatever the case. Typically, you have to do it every pay period. So you've been paying yourself throughout the year, right? That difference between $200,000 and $60,000 is $140,000. That $140,000 is now not going to be subject to the self-employment taxes, the Medicare, the Social Security, which typically is just over 15%. You will not have to put that $140,000 and make it subject to that 15+%. What will be subject to it is the $60,000. So what's the difference between $140,000 and multiply that by 15%? I'm just going to keep a flat, easy number here. That's $21,000 that you're paying in self-employment taxes, not an S-Corp, okay? So that's 21 grand right there. If you're paying yourself the $60,000 over the course of the year, that 15% of $60,000 would be $9,000. So that difference between $21,000 and $9,000, that $12,000 is what you are saving simply by being taxed as an S-Corp. So because you made this selection, you literally just put $12,000 back in your pocket because you filled this form out. You did it right. It made sense based on the factors of your business. It was optimal for you and beneficial for you to make this election. You did it right. You filed it on time. And for Matt, going back to our example here, he actually was way past the deadline. There's a way to go about filing for late relief. Essentially, you showed up late, you filled in the form late, IRS goes, sorry, you're late. Can't accept this. There's an ability to file a late election for relief, and there's a strategy in which you go about it to create a reasonable, you have to essentially write the reasoning as to why you were late and why you should be worthy of getting approved and getting this late relief. We were able to do that for Matt, and that was one of the reasons why he was so excited, was because typically if you're late and you apply, you're going to have to then be an S-Corp for the following year. But we were able to get him approved to be retroactively elected to be an S-Corp as of 2023 instead of the next year, 2024. And he was experiencing a ton of growth. He was making a ton of money. He's doing very well this year. So not being able to take advantage of those tax savings is just one small example of the many different types of ways that we can essentially strategize, optimize for your entity to save you additional dollars on your tax liability. So that $12,000, right, that I was just talking about is the main benefit typically that you're going to get by electing to be an S-Corp, you, the business owner, becoming an employee on behalf of the business and paying yourself a reasonable salary. And I say reasonable because it has to be reasonable. You can't just choose to pay yourself 10% of your net income each year. The IRS is going to go, no, that's not fair. That's not a reasonable salary. And they're going to claw back the difference. It's going to become just a much bigger headache. And it's going to actually just become more of an expense to you. You're going to lose time. You're going to have some frustration and probably going to actually end up losing more money than you would thought. There's also an important way to go about choosing, does it even make sense? Like if you're not making typically around $100,000, it doesn't make sense for you to go and elect to be an S-Corp. You haven't made enough money to where it makes sense because you have to then set up payroll. You've got to file a whole separate business return. You have to navigate these differences to do a little bit of analysis and make sure that this makes sense for you. That's essentially how this works. And I'll start walking through very briefly like the other side of it, which is the liability side. So here's just a quick example of a flowchart, a mind map that I created. You've got a single member LLC at the top, and then you've got the two types of entity classifications on the left and the right. Taxed as a disregarded entity, taxed as an S-Corp. If you are a single member LLC, which is by default, you're taxed as a disregarded entity, when you create one, you are still very wrapped up yourself personally in the business. Whereas if you're taxed as an S-Corp, you are considered an employee on behalf of the company. So in a way, there's a difference, right? There's like a buffer between any problems that might arise where they have to start coming after the assets of the business and where you are, which is a little bit more separated. Okay. So that's one of the biggest benefits. I'm not going to advocate that in every scenario you're going to be protected and you can just go ahead and do whatever you want. Like if you get a loan from the SBA and you don't pay it back, don't just assume that they just can never come after you. This is not what I'm saying. Make sure you do your due diligence, hire a CPA, hire a lawyer. I'm only going through the conceptual aspect of how electing to become an S-Corp, to be taxed as an S-Corp, can really benefit you. So your owner's personal assets, right? Yourself, if you're an S-Corp and you're considered an employee on behalf of the business, is generally going to be more protected and less at risk than you would if you're a single member LLC and stuff goes wrong, right? You're still very much wrapped up in the entity itself. So that is just like a very high level conceptual overview of the liability protection that you can get if you choose to be taxed as an S-Corp. So all in all, there's many benefits, extremely beneficial financially and potentially very beneficial from a legal perspective if you ever run into issues, things like that. Matt very much benefited from this, and we were just glad to make this happen for him. This, among other streamlining activities that we put forth, automations, insights, KPIs, things like that, allowed Matt to end up saving over $20,000 by the end of 2023. Guaranteed, this S-Corp election that we were able to get him approved for is going to save him a minimum of $10,000 this year. And that's not just amounts that are going to be subject to be taxed. That's dollar for dollar amounts that he's going to be able to put back in his pocket to where he literally is going to be making a return on us, working for him hiring us. He's actually going to be profitable. So these are some of the very interesting but important ways to think about entity structure, tax optimization, things like that. So if you do have questions on this, if you want more, involvement, getting to know your numbers, your KPIs, your tax strategy, your tax planning, say you need estates and trusts, you need to hide assets legally, of course, you need to, and I shouldn't say hide, I mean structure them in a way that they're protected from either liability or additional taxation. Sounds really fancy, but ultimately it's simply utilizing the tax code and making it as beneficial for you as possible. If you want help with that, if you need bookkeeping, if you want some more CFO level insights and reporting, book a call with us. Check out the video I have on my website down below. You can follow me on Twitter. I'm putting out a lot of resources. So I hope you did enjoy this. If you did, give this a like, subscribe if you haven't already, and let me know your comments down below. I try to answer every single comment, and I enjoy talking to all different types of business owners and what they need. So have a great day. I'm going to pop off here, and I'll see you on the next video. Peace.